All right, testing, 1, 2, 3. All right, I think I'm streaming. All right, so what is going on YouTube? Doing another stream. You guys can watch this and pretty much just um enjoy it, I guess, or whatever. So I'm just gonna talk about this trade I took last night. Um, it was a really good trade, honestly. It went for 1 to 6. So what I'll do is I'll show you guys the trade because I did post it. So this was it, and I haven't posted for just 1 to 3, but I was going for like way more than that. That's the reason why I closed from 1 to 6. So price takes off, hits the initial 1 to 3, obviously, because I closed from 1 to 6. Um, and yeah, so this is the trade before and after. And let's actually show the setup. So this is the setup, and I'm gonna explain how I took the trade so you guys can kind of just back test it and just go from there for yourself. So this is what I seen, man. I went on the weekly time frame because it's Sunday. Every Sunday, I like to go all the way up to the weekly and just see where the market's at. Because if the market's at a very key level in the weekly time frame, price is going to have a reaction from that 9 out of 10 times, right? So I'm not just going to buy the market just because I see a break and retest potential potentially happening on GJ where price can come back up. I'm going to wait for that lower time for break structure. So what I did was I just draw a horizontal trend line just to see this diagonal, whatever the freak it is called. I just drew out this trend line, and I pretty much just waiting for price to break it, right? Where I want to see price, instead of creating these lower lows and lower highs this entire time, I want to see price break it, and the directional bias that I see price going to, breaking structure and validating sells, right? Because I want to take a potential buy based off the weekly time frame. So all I essentially did was literally go from the weekly, right? Seeing, okay, potential break and retest is going to happen, drop down to the 15-minute time frame, and then literally just wait for price to break structure. So lower high, lower high, lower high, lower high, up, price breaks out, creates that higher low, comes right back down to support, right where this trend line touches, and then price takes off to the upside. Entry point right here, I put my stop loss based off the 5-minute, so I put it right under this like a little like low area. I was like, price shouldn't really break below this specific area up here, but I'll give myself that extra room. It was a 14.7 pip stop. And every stop loss is different for every trade. I treat every trade differently, and that was it. So, and then what I did was I went on the hourly time frame and I just drew out my structure zones. So for potential entries, I guess, but I'm not really going to do that. That was just like what I like to do, right? I want to see price kind of maintain structure and stuff like that. So what I did was I drew out this zone because you have this hourly support. That's now, well, you have this hourly resistance and you have it support, resistance. So when price breaks up, I want to see the same thing. So if you look at the 5-minute time frame or the 15, I like the 15 better. You can see how price broke it, comes back down to test that support, and then it takes up to the upside, right? And that was like the entry you would have had if you were trading London session. So if I would go to GBP JPY and just go to Wanda, what I'd be essentially looking for an entry would be right here. So this is around pre-London. So this is right before market open, and the entry would have been right there. So I would have dropped down to the hourly. I would have done the same thing. I would have looked at the weekly because it's Sunday, right? I'm like, okay, we're sitting at that support. And by that time, price is already showing you bullish momentum. So you're kind of getting that cheat code that price wants to be bullish and take off to the upside. So as long as you did proper top-down analysis and understand market flow, then you would have known, okay, boom, entry, boom, right there, waited for price to break above, which it did, entry point. And then you could have waited for a candlestick closure, this bullish engulfing candle right here. Then you could have put your stop loss like, let's say, so this is 10 pips really. You can put like a 13 pip stop loss, 3 pips below that area. And then entry point right here, 50% of that last bullish engulfing candle. And then just targeting high structure, so this supply zone area. And that would have given you like a 1 to 4.75 or 1 to 4. And that's essentially it. You know what I'm saying? That's essentially all I'm doing. But yeah, so going forward for the week, based off what I'm seeing, we could see buys continuation for GJ, and yeah, so like if I see any counter trend moves happening, I would want to see those break structure first before I would take a buy. Another example, like like right here, you see a high, you see a lower high, but if I want to take a buy, I want to see that break of structure first. Waiting for that break of structure, which what I mean is you have a high, you have a lower high, price creates a new high, which is higher than this high, and validating that price wants to go lower, right? Price can't go lower and higher at the same time. So if the higher time frames is giving you bullish sentiment, right? It's giving you a bullish indication, and then you're seeing the lower time frames back the higher time frames, then that's more of a higher probability setup that price is going to go up, right? So if you see a lower time frame break of structure and you're seeing a weekly support level, then I'm gonna take my bet on the fact that price is gonna go up. So I'll say that again, right? If you see, let's say, a daily support or a weekly support or supply and demand zone, right? You're like, okay, well, I see this zone, right? I see that price overall, it's bullish, and we only have these short-term these short-term sells, right? And you're like, all right, well, I'm seeing this zone right here on the weekly. It's Sunday or it's Monday, so it's the beginning of the week, and you're doing your top down analysis. Like, all right, well, I can see a potentially buy happening. Now, price doesn't have to buy; it can literally just come up, come down, and create like a head and shoulders, and just sell off for like 3 months. But that's not what happened, right? And what we're going to do to make sure that we give ourselves the best indication is waiting for those lower time frame breaks or structures. So again, all I did was drew out a counter trend line because I want to see it get disrespected. If its price is going to go up, it's not going to maintain this counter trend line. It's going to break it. As soon as it breaks it, that's giving me the green light that price wants to continue to go up because I have a weekly backing it, right? It's like again the thing that I talked about last, I think, a couple weeks ago. I was like, would you rather have your money backed by like like I don't know if you guys are into crypto, but you know how they used to say like Tether was backed by the dollar, right? So Tether was backed by the dollar. So it's like, okay, worst case scenario, it's backed, so they can get their money, we can get our money and stuff like that. Like it's not gonna just go to zero, right? Another thing is the U.S. dollar used to be backed by gold and stuff like that. So the U.S. dollar has it backed. Or like, let's say you open up a bank account and it says it's FDIC insured. So like you're insured and backed for 500,000. Now, would you want to go with a bank that's backed with 500,000 just in case you lose your money, or would you rather go to a bank that essentially, if shit hits the fan, you're fucked? So that's kind of the best comparison I can get, as in use the higher time frames as a backing. You have something backing you. It's like the big brother, someone that can hold you up, that can stand with you with war, right? And that's the higher time frames, because essentially that's where the market is going, is off these higher time frame levels, right? And that's it, man. And then you just jump on the hourly, just look at your zones, see where price can potentially go to for take profits. This can be a take profit zone right here. So you can have that as a TP. You can have this zone as a first TP. And then you can have like essentially another TP. So these are the ones you can have if you want to do something like that and jump down on a 15-minute time frame. And then you can be like, all right, entry point, stop loss, and then okay, TP1 would be for like a 1 to 1.5, TP2 would be a 1 to 3, and then TP3 would be a 1 to 6, right, or a 1 to 5, wherever you want to close at. I ended up closing for 1 to 6, and so yeah, so this is the trade I took, and I just wanted to show you guys because it's a really good trade where if you kind of understand exactly the top-down analysis behind it, you can kind of just break it down and kind of just rebuild it back up. You know what I'm saying? With future patterns and stuff. That's all I'm gonna talk about. That's it. Um, we might see a continuation to the upside, but I don't really know, man. I just kind of just go off what I'm seeing at the time, and it's New York session, but it's about to be Asian session pretty soon, and you just gotta let the market play out, do its thing, and go from there. And that's what I recommend, man. I don't recommend trying to be a fortune teller. You're not going to do that well if you have to be right in order to make money versus you just react based off the market's doing. So if you are realizing that, okay, the weekly has a support level that's potentially going to get respected, and then instead of just buying it just because price is at a weekly level or a daily level or 4 hour level, waiting for those lower time frame breaks to structure in a direction that you see in the higher time frames going, it's just going to give you a better edge, because now that's telling you that the lower time frames and the higher time frames are in sync. Do you know what I'm saying? So when things are in sync, that's your best opportunity and best probability setups, when they're in sync, right? When you have this 4 hour looking like it's not looking, making higher highs and higher lows the same way the weekly is, right? Creating higher highs and higher lows, and the daily is creating higher highs and higher lows. That is giving you such an edge in the market. And then at that point, it's all about just being consistent in what you're doing, right? Just taking those type of setups, right? And then that's it. And then you just formulate a strategy, a risk management strategy. I do 5% full symmetric. And I know that sounds very complex, but it's really not. All I'm essentially doing is, let's say my base risk is 1%, and this just makes you extremely more profitable, right? So you can be a trader who has a 40 to 50% win rate, and what a lot of people do is, oh, I'm just trying to change my strategy, and I'm trying to do this and that to give myself a higher win rate to make more money, be profitable. But instead, try to be as efficient as possible. So instead of trying to change the game and change this and that and change the way you're doing things, which could be fine, try to find a way to make it better, right? Try to find a way to maximize, be the best version of yourself, right? And you're trading, and and that's what I'm doing, right? So basically, let's say you're risking 1%, and this is a very, 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 very important part of the video, so please pay attention. Let's say you're risking 1%. So my base risk is 1%, risking 1%. Right? So on my next trade, and I'm targeting a 1 to 3. So let's look at the trade that I took. So let's say the trade I took last night was my base risk. That's the reason why I posted a 1 to 3, because that's essentially all I'm looking for out the move. The market, it did a 1 to 3, right? Even though it's going for more, the market did a 1 to 3, and I did close for a 1 to 6. That's what I'm doing, right? So we're gonna go to back to the charts, and my base risk is 1%. My next trade, right? Since I caught a 1 to 3, my next trade I'm gonna risk 4%. The reason why I'm risking 4% is because I'm gonna risk my base risk, which is 1%, and then I'm gonna risk my profit and profit 3%. Now, if this trade goes for another 1 to 3, which means that all I'm essentially doing is catching 2 1 to 3s, right? So all I'm essentially doing is catching 2 1 to 3s. So boom, and then boom. So my base risk, I caught a 1 to 3, and then I'm going to put an equal point equals to 3%. My next trade, I'm going to risk my 3% profit plus my base risk, which is 4%. So base risk plus 3% was going to be my next trade. I'm still going to be targeting 1 to 3s. You can do this with 1 to 2s. You can do this with 1 to 1s. You can do this with 1 to 4s. But it's all about being consistent with your wins. Try to cluster your wins together, because if you can cluster your wins together, at least going to at least going to 2 or 3 win streak, you will extremely catapult your trading. Extremely catapult your trading, right? And this will make you, as a trader who's like at break even, profitable just off the bat. If you have trades where you're catching 2 1 to 2s or 2 wins back to back, this is going to make you a lot more profitable than you already are. You're doing the same trading. So my base risk is 1%, and I made 3%. My next trade, I'm risking my base risk, which is 1%, plus the 3% profit. So my next trade, I'm risking 4%. So my next trade, I'm risking 4%, right? So let's review this. My base risk, I made 3%. My next trade, I'm risking 4%. Now, if that trade plays out, I just made 12%. right? So I'm already up 3% and I just made 12% off 2 wins, right? That 12% trade, if I was just risking 1%, is like the equivalent of you catching 1 to 12. Now, a lot of you guys are trying to hold trades out to catch these big risk rewards to give yourself more of an edge, instead of just going for 1 to 3s and 1 to 2s, but giving yourself that same risk reward without taking yourself in the market and holding trades longer and longer and longer. Because a lot of time what happens is you may have only caught a 1 to 3, 1 to 4, and then price reverses all on you because you're trying to catch this massive move in the market, right? And a lot of you guys don't know is forex pairs don't trend as well as NAS, US30, and SPX do. So the indices trade trend better. So that means that you could be in a buy and keep being in a buy, because if you look at the weekly, it's just going up, 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 up. But that's not the case for pairs like GJ, so, or Euro USD. So again, your base risk is 3%. Then you made 1 to 3. Your profit is going to be 3%, and then your next trade you're risking 4%. So if you win that trade right now, if you're doing asymmetric, you're going to revert back down to doing 1% risk on your next trade. So that means that on my next trade, I'm going to risk 1%. So if I lose that, I'm only losing 1% out of my total 15% that I made, because I made 3% here and then I made 12% here because they're both 1 to 3s. So now you have gave yourself a massive edge. So now you can go in a 6 losing streak and still be up. 15 minus 6, you'll still be up 9% on the week. And that's just risking 1%. I'm doing 5% full bisymmetric, which means is I'm doing 5% as my base risk. So instead of this being 1%, this is 5%. So I'm doing 5% as my base risk, right? And then on top of that, what I'm doing is when I catch, let's say a 1 to 3 or whatever, which I caught a 1 to 6, but I'm just saying if I would have caught a 1 to 3, I'm going to risk 20% on my next trade, because that would have been 15% is what I've made, plus my base risk is 5%. So if I lose that trade, I'm only really losing 5% of my actual base balance, and a majority of what I lost is just profit. So on top of that, what's going to happen is if you catch 3 1 to 3s in a row with 5% full bisymmetric, you'll 200% your account. So you'll go from having, let's say, $1,000 in your account to $3,000 in your account, catching 3 1 to 3s in a row, right? It's not that unrealistic to catch 3 1 to 3s in a row, but it's very unrealistic for you to sit here and try to like risk 45% of your account or 30% of your account and try to catch these massive moves or try to hold these massive moves in the market. It's very unrealistic to happen. And you don't have to do bisymmetric. Bisymmetric just means that what you're doing is you're risking your base risk and then you're risking your profit plus your base risk. So you're going to do this. You're going to risk 1% plus 4%. Let's say you catch those 2 trades when you're out 15% of your account. 12 plus 3 is 15, right? On your next trade, you're just going to do another 4% risk, which means that worst case scenario, if you just made 15% of these last 2 trades and you do another 4%, you're still up 11% on your account. And that's with you risking another 4%. But if that trade plays out, now you're up another 12%. So now you're up 25%. Well, now you're up 15% plus 12%. So now you're up 27% of your account with a base risk of only 1%, which now means it's going to take 27 losses just for you to get back to break even. It's extremely unlikely to happen. And not only that, with making 27% in a week just off 1% full bisymmetric, you'll be able to give yourself that much more profitability on the edge, and you don't have to be trading every single day. You could have done this in 2 to 3 days out the market. So again, that's just with 1%. If you do these numbers with 2% or 3% or 4%, it gets even crazier. And what you guys can do is go on YouTube and search up forex asymmetric trading, and there's people who break down this whole thing. But the thing is this: trading asymmetric is tough because let's say you risk 1%, caught 3%. If your next trade you lose, you're losing 4%. You're losing your 3% profit plus your base risk, and a lot of people can't handle that. They can't mentally handle the fact that they just lost all their profit. But if you're one of those people that can truly stick to a system and plan and create, and if you don't backtest and see your MyFX books and see, okay, like what's your odds of going on a 2 streak or 3 winning streak? If it's high, where if you look at your MT4, MT5, whatever you're choosing, Trade Locker, and you're noticing that you are catching wins back to back, this is just going to give you more profitability. This is just going to give you better edge in the market, right? And this is what I'm going to be doing to grow this account. So what I'm gonna do is I'll show you guys my FX book. I just started this account. If you guys want to follow me on Instagram, it's SLZYSAIYAN. So that is my Instagram. You can follow that, and then you guys can kind of like um just keep up with what I'm doing. But so this is my FX books. I'm gonna show you guys my FX book. I just started this account. Oh, it's not even updated yet. So it's not updated, so you guys can't see. But I did catch that one trade. Yeah, it's not even showing it. But I'm doing a $500 deposit, and we're gonna try to grow this to whatever, right? And I have this spreadsheet, which is I'm gonna show you guys as well. It's a really good spreadsheet. So let's say you started with $500, and let's just say you're averaging now with 5% asymmetric. I already know the numbers because I've been doing this for like the past year and a half. So if you catch 5% full bisymmetric, you'll turn $1,000 to like $1,840. So you'll make like 84% of your account, and then it'll take like 4 trades for you to be down to like 47% profit in your account. So let's just say you're averaging 50% profit. Now, if you're hitting a bisymmetric every single week, you're making 200% gains in your account. So just saying 50% is extremely lowballing this process, right? But in 3 months, you'll literally have 50K, well, 64K, right? And that's just off of 50%. Now, if you want to be more conservative, let's just say you're making 30%, right? So let's just say you're just doing asymmetric. So that means that you're just catching 2 1-3s in a row, and you're making 84% of your gain in your account. In 3 months, right, which is 12. So each count these every trade as a week. So this is 1 week, 2 week, 3 week, 4 week. This is month 1. So in month 3, you will have 11 grand. Right? In total, if you keep compounding, yes, you'll get to like the 4 or 5 figure, you'll get to the 7-figure mark, but like 3 to 4 million. But that's in 35 weeks. But it's just, and there's a reason why it's so important to stick to a plan and edge, man. If you guys are having a hard time sticking to a plan, start going to the gym, right? And the reason why I say that is because it'll start to train your mind and body to stop looking for instant gratification. And that's what I started doing, and that's what I'm doing now. I go to the gym 4 to 6 days a week. Right now, I'm only doing 4 days a week, and I'm doing push, pull, legs, arms. And me going to the gym at the same time, at the same place, sticking to a specific regimen where Mondays I do this, let's say chest day, push, pull, leg, arms, right? That's the split I'm doing right now, push, pull, leg, arms. That's automatically going to start to give yourself mentally that, okay, I got to stop looking for instant gratification. If I go to the gym and I work out for 12 hours, I'm not going to be able to look in the mirror and see the progress. But if I go to the gym and I work out for an hour a day, and I do that 4 days a week, now if I'm eating right and I'm sleeping well, getting enough sleep in, and I'm eating right, and I'm doing exactly what I'm supposed to be doing in the gym and doing progressive overload, I'm going to see results in 2 months or 3 months. You see what I'm saying? So then you start to apply those same things to other things in life, as in trading. Then you start just trading your plan, and instead of looking for yourself to be winning every single trade or hitting every bit asymmetric every single week or bisymmetric every single week, you just follow your plan, follow your plan, follow your plan. And then 6 months later, you're like, holy shit, I actually really done pretty well on my account. You know what I'm saying? So that's after you got to the point where you know how to trade. That's after the point where you find out that you're profitable, or at least at break even, and then you can go from there. Because if you're a break even trader, asymmetric could be what you need to give you that leg up where you can be profitable. And then all you have to do at that point is just get better at trading, right? Backtest more. Get more systematic with the way you're doing things. Top-down analysis, looking for certain setups, backtesting those certain setups, seeing which setups give you the highest profitability. So if you have a 70% win rate taking these certain patterns, only take those certain patterns, and then you just run it up with those type of setups. And then you just go from there. One session, one pair, 1 to 2 trades per day. They say you can only take 1 to 2 financial decisions today, so why go past that, right? So I recommend if you win your first trade, for the most part, call it a day. Now, if you lose your first trade, take another shot at it. If you lose that, chances are you're not going to end this day profitable anyway, so just call it a day. So now you take your 2% loss or your 10% loss or your 6% loss, whatever your base risk is, you just take those losses, right? You come back the next day. You try it again. Let's say you hit for a 1 to 4. Great. You come back the next day. Now, since you caught the 1 to 4 and you're doing asymmetric, if you're risking 1%, today I'm going to risk 4%, right? Because I caught a 1 to 3 or above. So it means in my next trade, I'm going to risk my base risk plus my profit. What I personally do is I just let my trade run. So if my trade for the base risk, which I did, I risked 5% and I caught a 1 to 6. So I made 30% of profit off that one trade, right? I'm not just going to cut my trade just because I'm targeting 1 to 3 if I see that price is going to go higher. So now what this does and allows me is I get 2 shots at an asymmetric. So that means that my next trade, I'm going to risk 20%. Now, I'm going to risk, technically it gives me 2 shots. Yeah, it gives me 2 shots. So my next trade, I'm going to risk $75, right? Or $100. So my next trade, I'm going to risk $100. And if that doesn't play out, then I'll risk $75 or the $50. Whatever the remaining balance is. So that gives me an extra shot to kind of try it again. Because I made in total on my account today, I made for that first day trading, I made $170. So my next trade, I'm gonna risk $100. Now, if that trade plays out, then I'm gonna make, let's say, $300. And then on my next trade, I'm gonna risk another $100. And then if that trade plays out, then I'll make another 300 or more. Now, what I'm personally doing is I'm trading by percentages. So I'm actually not really risking 100. I'm risking like 20%, which is going to be 20% of my current account balance. So if my current account balance, which is currently at 670, and I started with 500, right? If that trade has boosted me up to 670, I'm risking 20% of that current account balance. So that means I'm risking 20% of 670. Now, if that trade doesn't play out, I'm going back to risking 5% and I'm starting all over. That's the whole process. So if you guys, again, want to learn how to get into asymmetric and bisymmetric trading, I highly recommend you go on YouTube and you search up forex bisymmetric trading or forex asymmetric trading. And bisymmetric is just doing it again. So if your base risk is 1% and then you caught a 1 to 3, your next trade you're risking 3%. Well, you're risking 4%, which is the 3% profit you made plus your base risk. So if your base risk is 1% and you caught a 1 to 3, your next trade you're risking 4%. If you risk 4% and you make 12%, you just made 15% in 2 trades. Again, now if you want to stop there, you revert back to risking 1% and you do the whole process over again. And then that's the way you trade. Every time you hit a bisymmetric, you start over. Bisymmetric means that you risk your base risk plus your profit twice. So you do it once after you unlock it. So first, you have to unlock the ability to risk the asymmetric, which means that you have to catch the 1 to 3 first, because that's what eliminates you taking all the risk. You're only taking 1% risk out of the 4% risk. I'm only taking 5% risk out of the 20% risk that I'm exposing myself to because I'm risking the house's money, right? So it's a very, very good way of trading, right? Because it takes a lot of the stress off you and your personal capital, and it takes all the stress, majority of the stress, on the fact that you're actually risking your profits and leveraging it in a better way. So now you don't need to be focusing on catching these massive risk rewards, and you don't need to be focusing on catching these massive win rates. If you're just winning, let's say 2 wins out of the week or 3 wins out of the week, but if they're back to back, you're extremely going to have a better edge than someone else, right? That means that you never have to hold your trades past 1 to 3 to get those 1 to 12 type of risk rewards. You never have to be doing all this other stuff. You can be doing the bare minimum and being very simplistic with the way you trade, but having yourself the best edge. Now, if you want to be successful and consistent as a trader, the number one thing you have to do is simplify your trading. If you go on the charts and you have to be right, if you have to have this elaborate freaking breakdown for how you won the trade, you're not going to be consistent because there's no way you can sustain that level of performance, right? If I'm running a mile, I'm not going to be able to sprint for 100 miles straight. You may be able to jog, you may be able to walk for 10, 20 miles, but you can't go full sprint for 20 miles straight. No human can sprint full blast for 20 miles straight without slowing down to some degree. I don't care who you are. You know what I'm saying? Another example is, let's say you're working out and you're doing bench press. Let's say you can do the first rep. Your first rep and your last rep are not the same. If you're bench pressing 225 and you're doing it for 20 reps, your first rep and your last rep are not at the same speed. You see what I'm saying? Everything has a blow off point, a cutoff point where it kind of things slow off. You gotta have to find that for yourself as well, right? And that's when it comes to your trading. If you can be able to catch 2 or 3 wins in a row, if you notice that, okay, I'm catching 2 wins in a row before I start catch losses. When I catch a win, a lot of times I'm catching another win. If that's the case, then just do asymmetric. Now you just completely just transform your trading. Now you can see 4 times the amount of profit. You see what I'm saying? So, and by doing the same thing, you have just unlocked yourself a way better way of trading. I'm gonna end on this note. Again, search up asymmetric trading forex on YouTube. It'll explain everything perfectly. I'll do it for you guys. So I'll go on YouTube right now. I'll go on YouTube and I'll search it up. So if you guys don't know how to spell it, I'll spell it for you. Asymmetric compounding forex. I didn't even have to type the whole thing out. So this is how it's written: asymmetric forex compounding. Watch this video and watch this video. These 2 videos are really good explanations on how to do it. And you can watch this video. You can watch this video. He explains it really well. I found out about this about 2 years ago. And it's a way you can get funded. I don't recommend funding anymore because of the whole MyForex Funds thing. But if you guys want to do that, go right ahead. But I personally think at this point, just stick to cap. Just trade your own capital. Save up $500, $1,000. Go do Uber Eats. There's ways that you can maximize that. Get DoorDash and Uber Eats, double up, and then you can make $300-$400 in a day, $200 minimum. If you have double up, then just do a full week. Do like 10, 12-hour days for like a week. Stack up your bread, and then throw that $500 or $1,000 into your account. I just literally did that, right? I just did 54 hours on Uber Eats alone. Made like $1,000, and I put a $500 into an account. Now, minus expenses for gas and all this stuff, you can fucking do it. You know what I'm saying? So let's get this bread and let's get this money. You know what I'm saying? And that's the money that I did to deposit into the account. That's solely off Uber Eats. So I'm just literally showing you guys that you can do it. If I can do it, you can do it. And these are the videos. He explains it perfectly asymmetric, right? There's another video. One of these videos kind of go over bisymmetric, and that's just doing the 4% risk twice. And this is, I'm telling you guys right now, if you're a trader who's struggling to really hit those big numbers and you're like profitable, but you're just profitable, this is going to give you a way better edge. And that's it, man. I hope you guys enjoy this stream, and I'll keep you guys posted. And again, this is going to be posted onto my YouTube channel. My YouTube channel is right here, SLZYFX. It's going to be posted in the live account. Not the live account, the live. So you guys want to watch this again on my lives, and it should be on my trading view for the next 30 days. So you guys can watch this video, download this video, do whatever you guys need to do. But asymmetric compounding, look it up. If you're interested, at least watch the video. That's the worst thing you can do is watch this video. You know what I'm saying? It's free. Just watch it, and if it helps you, and if you feel like this is something that can transform your trading, then do it. If you don't like it, then don't do it. But at least give yourself the opportunity to find out. I'm ending on